But ultimately I'm looking for longs. So we've got a nice little range here from this swing low to this swing high. Mark that across, we've come back into OTE, perfect, beautiful. And now if we invert this, I'm going to execute into a long position. Simple as that. We're also inside of a macro, so it's quite easy to look at. And I'll mark this macro out, which is from 650 to 710. This macro is the first macro of the Asian session. Now I do like trading it sometimes. So I'm gonna enter in a buy position right here. Stop loss, I'm gonna probably put maybe about here. So I'm gonna enter in now, guys, but I'm gonna move my stop a little bit just below this order block. Again, this is a close proximity entry. And what I'm gonna kind of illustrate here is what I'm gonna do with this account. So we're gonna enter there and we're gonna go for a little scalp. Now, what I'm gonna look at is putting my risk to reward tool somewhere around here, right? And we're gonna go for a little scalp, roughly about there. So I'm gonna put a sell limit, 21,176. So let's put a sell limit right there. And that's it, easy as that. So we've come back down into OT, we have swept sell side liquidity, which is nice. And then after sell side liquidity, we've inverted this fair value gap, which has become the entry. And it's just gonna be one contract, nothing crazy. Now, this is on a starter account as well with my funded futures. So you don't need to have, massive pools and massive risk to rewards to make money in the market. It doesn't need to happen. So this macro, I'm gonna mark it out so you can see that. And again, the theory here is that price has pulled back down like this. It's formed all this low resistance liquidity, and in this macro or around this macro time frame, we're going to look for some kind of move back to the upside. That's the whole idea. Could you enter again from the pullback into this inversion? Of course we could. Right, of course we could. Now I want to make sure that I'm actually going for a 1-to-1. So actually I might need to move this up a little bit further, guys. I wanted to go about there. Beautiful. So I'm in with 1 mini as well. The range is quite large. So you can enter off, obviously, the inversion fair value gap. You can preemptively enter like I did. You can enter from the retracement. There's different ways you can use inversions to enter a trade. This is my model. This is, one of my A+ models. Again, study the chart, study what you're looking at here, because this is like a really good model that I've seen play out time and time again. Now I'm going to really move that below the bodies because I want to try and get a really quick scalp into this trade, and all I'm looking for is a quick 1-to-1. Why only a 1-to-1? Because I'm only using one contract, because I can only use one contract. It's a fresh account. I've had one winning day on this account so far, so I'm looking for something like just short. So maybe we can actually go there, to be honest. We can go right there, and that'll be just a little, small scalp. If I was in with, 2 contracts, more contracts, then I'd probably hold runners. However, I don't mind the idea of just taking a quick hit. Where would I be taking my partial? I'd be taking my profit or partial here inside this premium civvy. So that there is a premium sell side imbalance. So if I just mark that out, we've got a premium civvy. Now that premium civvy, what do I mean by premium civvy? I use the dealing range, or I use optimal trade entry. And I'm using the optimal trade entry range from this swing high to this swing low. Now I haven't marked it out, but in my head, I'm assuming that this premium civvy rests in that rough area. So if I was to mark out a fib now from this swing high and then this swing low, you can see now that that premium civvy actually rests in that OT range. So ultimately, if we do come and sweep this buy side, I'm gonna have to think about mitigating risk. For the meantime, just put it tight below that order block. Right, so the stop loss is about 13 handles. The TP is roughly about the same. So it's about a 1-to-1 risk to reward. Nothing too crazy. Now, do I want price to go much higher? Of course I do. Like, I do believe that price can probably push up into these realms at the top here. However, you don't need to take price that far to be profitable or to have a profitable model. It's important. A lot of people get too concerned with that. And ultimately, the model is quite simple. We've formed a nice range. So this here is the dealing range, again, from this low to this high. And what ICT mentions and talks about is that becomes your dealing range. Now with that dealing range, you can pull a fib on that dealing range, which is what I've done here. I'll make that a little bit thicker. And you could also mark out the halfway point as well. However, I prefer waiting for optimal trade entry, and the fact that we do that just before the macro is really nice too. But this is an A+ model. This whole framework, study this, go back in your charts, look for other confirmations, look for little price signatures, because this is the A+ framework that I teach time and time again. In my Discord, on YouTube, I've mentioned it, macro inversion fair value gap. And it's the strategy I've continued to use probably for over a year now. In all honesty. So it's one of those things where you got to see things that repeat. That's what trading is about. It's about seeing repeatable things, repeatable patterns in the market, and then executing based on that. That's all it's about, right? That's all it's about. So ultimately looking for this to spool a bit to the upside, aiming for about 13 handles, which is a 1-to-1. Again, that stop loss placement, which was roughly about here. So I'm risking about 13 handles on the trade. Well, not even really, about 12.5 handles. So if you wanted a 1-to-1, it's like here. But I'm going for a little bit more, right? Just a little bit more. Nothing too crazy there. And ultimately in these situations, you just wait. So first entry could have come from the inversion, second could come from here, could come from here. Like you could pyramid into this position, that's completely fine. Because we've got the backing of the macro, because we've got the backing of the confluences, that's completely fine. And what should happen here, what you're expecting to happen, is you want price to react or retrace from this area. So it can tap into the order block. And let me just kind of zoom in here so you guys can see. We can tap onto that OB, that's fine, that's completely fine. The reason why my stop's gone below the body is because my stop is below the halfway point of this order block as well. So if I was gonna, mark this out, and I've got to zoom in for this too, right? I'll just mark this out while we're here. And I'll write in here just OB. So OB stands for order block. Positive is because it's a bullish order block. And I'm just measuring from the body. Like I'm just marking out the body. That's just how I do it. Just easier to read. So we've come down, we've tapped onto that bullish order block. But if you mark out that whole bullish order block, it's the whole candle. It's this whole thing, right? This down close candle, it's the whole thing. So that's the whole bullish order block. And my stop is pretty much like if you were to pull a fib on the order block, it's way below the 0.5 level. And I don't want price to really close down there. It can wick there, but I don't want it to close there, which is why I've got my stop where it is. So ultimately that bullish order block, if I was to measure out the Fibonacci, so take the candle wick high and the candle wick low, mark that across, you can see there's the 0.5 level. Now that will be a spot where I trail my stop to. So when I'm looking to trail my stop loss, where can I trail it to? I can trail it below this swing low or below that 0.5 level. So if we start breaching some of these highs, then I'm gonna consider moving my stop loss, right? Because there's a few little swing highs here, and I'll consider mitigating my risk. Why? Because I don't want to have as much risk on the trade anymore. I want to still be able to give myself the opportunity to execute other positions if needs be. That's really important. So again, 7 seconds on this candle. This here is like minor buy side liquidity. We call it minor buy side. I'm not really targeting liquidity, right? But this is like minor buy side. Right, that's minor buy side liquidity. I'm targeting an imbalance. But what I am going to do is I'm going to move my stop just a little bit more, just below the median threshold of that order block. Just so you guys can see. So again, if I was to get out that median threshold, let me just mark this out a bit thicker so you guys can see. If I was to mark out this median threshold, so this order block here, mark that across. Could probably bring it up a little bit more, to be honest. That's fine. So let me just mark this out. So median threshold kind of lines up with where this wick tapped into, kind of, right? Very close to it. So when you're using stop loss placement, I usually put it below the order block to start, and if price starts to develop, then I'll move it a little bit. Why? Because there's every chance the wick could have come down here and then still close above. And because of that, I need to just be careful. Otherwise you can get stopped out and the price can obviously go in your favor. But ultimately, yeah, that's what I'm looking at. Looking at around a 1-to-1, that's what I'm looking for. That's the median threshold, so we can probably move that below the median threshold now, that's fine. And we'll talk about what price is gonna currently do, right? So I need to get rid of this. During a macro too, right? I'm not just doing any random time frame, it's in the macro, it's during a macro. And sometimes what I'll do is I'll look at ES as well. So I'll get ES on the side here, right? So I've got the second chart and I can have a look at ES and then I'll bring it across for you guys too. This is the high in the NASDAQ, right? That we're approaching very soon, this swing high here. The NASDAQ hasn't even swept it, but this swing high here is the same as this swing high. So it's not even, we're nowhere near on ES. We've still got room to move, which is a good thing. And I usually check for like SMT and things like that. I don't need to always have SMT, but I just check for SMT. That's kind of what I do. And again, just aiming for those base hits. If you wanted 10 handles, then 10 handles for a trade, which I always preach anyway, is here. So I'm going to mark out where 10 handles would be so people can see too. For people that I'm teaching, like for new people, I always teach them, like just take 10 handles to start. If you're not confident, if you're new to the market, take 10 handles to start. Take 10, take 10, take 10, because what 10 handles is going to do, it's just going to allow you to scout the market and take money off the, take money off the market while it's there. The milestone account video, which I've posted recently, and I'll post a link up on the screen here, that there was honestly done with about 10 handles, right? That's it. Now, since we swept that buy side and we've just taken TP, what can I say about that? Perfect trade, perfect execution, and very quick during the macro. It's almost like it's magic, right? And that's how I trade, right? So a bit of a shorter video here, guys. I hope everyone is, starting this year fresh and obviously sticking to your plans, sticking to your goals. I think it's really important to actually step back, reflect on your year 2024, look at what you did good, look at what you did bad, look at how you could improve, and then ultimately from that point, then decide what you need to take forward into 2025. For me, it's all about holding runners and starting to copy trade. That's my goal, or my goals for 2025. For you, for other people that I've mentioned in my Discord, for those people might be, sticking to plans, sticking to one strategy. And again, this is an A+ model. Study this, study the chart, macro, inversion, fair value gap. Hopefully you guys enjoy this video. Happy New Year for everyone, and we'll talk soon in the next video. Peace.